Happy Sunday, guys, and welcome back to my channel, The Wealthy Mindset. It's yours truly, Money Making Mitch. And as usual, guys, this is not financial advice. Please do your own due diligence and research. As Elon Musk continuously spread hate and anti-racism and incite violence on Twitter against immigrants of color, not just in America, but in England and other European countries. You don't believe me? Go on Twitter. You can see for yourself. What is William Lee focusing on? Very important. Well, it's a smart move into the mass market and why it can compete and win. Yes, we're going into the mass market globally. And the question is, why can it compete and win and win? William Lee has made NIO's direction very clear. The company is developing a sub 200,000 RMB vehicle platform. Yes, you heard that right. Aimed directly at the heart of China's EVs market. At the heart of China's EV market. The 100,000 to 300,000 RMB segment, which he estimates to be a $15 million unit opportunity. Now, remember, we have the very high-end segment, which is the ET9. Next year, we'll be releasing an ES9 as well, which is the SUV that is in comparison to the ET9, but of course it's an SUV, so it'll be on next level. We also have the ES8 for the upper middle class, so to speak. We have the ET5. We have beneath that we have the L90, the L60. Next year we're coming out with the L80 for the middle and lower middle class. And we just released the Firefly to dominate that segment as well. A car that we're going to take worldwide, a global brand. This is getting so amazing. It's unbelievable, guys. Unbelievable. I wish people could see what we're seeing, but sadly, that's not the way it works, does it? This is not a shift away from premium. It's a scaling strategy. Because remember, even our Firefly is not a shift away from premium, even though it's just a little over $11,000. It's a premium boutique little EV. Boop. Unbelievable. With 9 airbags made out of submarine grade steel. NIO is not entering this space just to sell cheaper cars. No, just like with our L80 and L90, it's cheap in terms of price, but in terms of quality and 5-star ratings and technology, it is all there. They are entering it to scale their ecosystem. Here's why that matters. Scale unlocks margin leverage. Lower price cars sold in bigger volume allow NIO to spread research and development. Yes, because you collect data from the road for our driverless technology. Software and infrastructure cost across far more units, improving long-term profitability. Long-term. The ecosystem advantage carries forward. Unlike many competitors, NIO doesn't just sell cars. It brings battery swapping, battery as a service, over-the-air software upgrades, a strong lifestyle and community brand. Even at lower price points, those elements drive recurring revenue and customer loyalty. As we all know, we're going to be selling chips to the entire EV industry next year in China, my dear lads. Wrap your heads around that. Some still say $100 share price. I say no, you're still dreaming, boy. This is $1,000 share price coming. They are not sacrificing brand identity. NIO keeps its premium positioning intact while this new platform targets mass adoption. Think of it as expanding the base, not watering down the brand. Competitive landscape, this is a battlefield. The 100,000 to 300,000 RMB segment is where most Chinese EV growth is happening and the competition is fierce. We are the lions, the rest are hyenas that are trying to pretend to be lions. XPeng now regularly delivers over 40,000 vehicles per month, proving that strong tech and pricing can drive scale quickly. Zeekr Group recently passed 60,000 monthly deliveries, showing how a brand can operate in both premium and near mass segments at the same time. Huawei-backed auto brands are selling tens of thousands of vehicles at aggressive price points with high-tech integration. I still say they are our only true competition. This shows one important thing: the opportunity is real, the volume is there, and whoever scales properly can dominate. NIO already has the tech. Infrastructure, very important. Yes, we put the horse before the carriage. Infrastructure. And brand to compete. Now it's attacking volume. When NIO has a structural advantage, most competitors rely on single sale economics. Sell the car, sell the battery, done. Sell the car, sell the battery, done. Bye-bye. NIO doesn't. Because of battery as a service and its swap network, NIO separates the vehicle, the battery, the service relationship. This gives NIO recurring battery revenue, lower upfront price for the customer, long-term monetization via services, software, and upgrades. Dynamite. In a mass market where affordability matters but technology expectations remain high, this is a huge lever. Risks and why they're manageable. Yes, the market is crowded. Yes, price wars are brutal, but NIO has real defenses. A massive and hard to replicate battery swap and service network. A loyal and growing user base. Strong software and over-the-air capabilities. I remember someone was saying that Cattle is trying to dominate NIO now with the battery swapping. Poor lad. High brand trust in China's premium EV space. Execution will matter, especially on cost control and ramp speed. But strategically, the move is sound. Bottom line. The sub 200,000 RMB platform is not desperation, it's expansion. It allows NIO to scale volume, strengthen its ecosystem, increase long-term revenue per user. Compete across both premium and mainstream segments. If exceeded well, which we know it will, this move transforms NIO from a premium EV maker into something far more powerful. A vertically integrated EV plus energy plus software ecosystem with mass market reach. I hope you guys found this video yet again on a Sunday to be informational, inspirational, and motivational. If so, guys, boop, boop, boop. Don't forget to hit that thumbs up. It takes a lot of time to do these videos and the editing. And if you haven't yet subscribed, you might want to think about doing so, because in this channel, we are waking up the middle class for the first time to get a major piece of the pie from the ground level up as to how the games are played on Wall Street. And like 50 said, we get rich or we die trying, guys.